It's the things that you do, and it's the smile on your face, and as time goes by, I know I'm in a better place. I'm in a better place.
Welcome, everyone. Thank you so much for tuning in tonight. My name is Labrita Dews, and welcome to my podcast, Buying and Selling with Bree. Tonight, we're going to do something a little bit different, or I'm going to do something a little bit different. Miss Kesha, the one that runs and owns the podcast, she asked me to do something, to reach out to other realtors that was in other states, just to network. So that's what I did tonight. I'm going to have a guest from the Virginia area. But before I bring her up, I just want to say that the market is still tight. There are less and less houses on the market than it was a couple of months ago. We as realtors don't know how the market is going to be, or, we can't foresee anything. We're just like the buyers, we don't know anything until it hits the market. But one thing I will say that the average price of a house for a new build is just mid threes going up, and every week it looks like it's going up. And if you are a buyer that is under 300,000, it's going to be rough. If you want a new build, it really is. It's going to be rough out there. But we as agents, I as a realtor will make sure I do everything to get you that house. But as a buyer, I really would like all buyers to understand those ones that are in the 250 range. It's hard out there. The ones that are in the 270 range, you might be a little bit better. And now more and more houses are just going well over asking price. They're not even staying on the market 1 or 2 days. If you put it in coming soon, people are putting offers in, and by the time it gets on the market, sometimes you have 10, 15 offers. It's just everyone wants a house right now. So I will say, just as a buyer, you really have to be patient. You really have to be understanding. You just have to, and it gets frustrated because you put in all these offers and you feel good about it, and then bam, they be like they selected another offer. But one thing to me that I tell my clients, you just never give up. You just keep going, and then something else, something will always come up when you least expect it. But just keep fighting and keep going. And the new build is a list now for all houses. It's just a list for builders. And what they're doing now, like my client that I have from Carolina, we're on a list, and then the builder will send out that say, hey, we got this one house available, and whoever replies first, that's who gets that house. And that's the way that some of the builders are doing. I'm not going to say all the builders, but that's what some of the builders are doing. They're sending it out. They say, hey, we have this house, coming up. And most builders are not even sending out notices about house until they get the lumber, for that particular plan. And some builders are only sending information out when it gets to a certain stage of the house, when it is sheetrocked. It depends on that builder. So whichever builder you pick, every builder is they have their own different, rules, regulations, and guidelines. And it is what it is. And a lot of things are just the things that you got last month, you may not be able to get them this month. The incentives that you got that were given last month, you may not be able to get the same incentives. A house that was $290 2 weeks ago, that house already now might be $315 or $320. It really depends on the market. But hopefully, soon, or we don't know, hopefully we can, try to get the market, or not we, but they can get the market, under control, so everybody can try to buy a house. But just know now, if you are a buyer and you're under 300, it's going to be really tough. Even at the 350, it's still multiple offers at the 350. So that's why some buyers are just opting to go with the new bills if they can afford it and if they have the time to wait. That's why some of them are just willing to just put their name on a list and just wait. And with a new bill, it depends on the builder. The builder can be anywhere from 6 to 8 months. So, that is another thing. So if you're in a lease and you see a new bill you want and you still got another year on your lease, that might be an option for you. Is to, go with a new bill that's affordable in your price range. And so just know too also that um the same builder can be in a different area and it might be a little bit more pricey. That could depend on the school district. It could depend on where it is. It could depend on the taxes. But just know that sometimes you can come to Fort Worth and buy a house for 300, but you might go to another city and it might be 340 or 350 for the same exact plan. So when you are buying a house or as a buyer, it is very, very, very it's better for us when what area that you want to live in. You pick 1, 2, or 3 areas and just focus on those areas. And then sometimes when you are looking at a house, you might add 1 or 2 areas. But it's best to know that you really want to look at the area that your price range is in. You don't want to go to a house and oh, you think you want it or whatever, and you find out that it's not in your price range. So tonight is just going to be, we're going to be talking about, we're waiting on the lender to come, but until the lender gets here, I'm just going to bring up my guest. My guest tonight, her name is Victoria Bellick. She is family. She is a realtor in the Hampton Roads area in Virginia. She is a well experienced agent. She works with military people, as well as myself. I am retired military, so it's good to have somebody that's on the show that we both know we're military. That's our niche, and that's what we try to do. We still service everybody else, but you just sometimes you got your niche. And I want to say welcome, Victoria, to my podcast.
Thank you.
It's great to see you, and let everybody know where you're located.
So I am physically located in the Hampton Roads area, which comprises of Fort, oh my gosh, got tongue tied. Fort Eustis, Langley Air Force Base, and Norfolk Naval Station. And you have Newport News, Hampton, Yorktown, Norfolk, Virginia Beach, Williamsburg. So there's 7 cities. We call it the 7 cities. So there's 7 cities around several different bases, going everything from Air Force, Army, Marines, Navy, you name it. That branch of the military is here.
Okay. So are you licensed in any other state besides Virginia? Do you have licenses that you can, work anywhere else? Or do you have another team in another state, or where are you licensed at?
I do. So I'm also licensed in Tennessee. And I have a network over there that I work with. My team out there is absolutely amazing. So in Tennessee, one of my partners that I work with, he's actually about to retire from the Army, which is awesome. So, we understand what it means to buy with the VA loan, and we also understand what it means to sell and piece it and move.
Right.
My husband and myself, we've PCS from Germany back to the States. That's a big move for anybody. And there's a lot of unknowns. For like 24 hours, we didn't have a phone, right? Because our phones were German. And then coming back, we had to figure that out. So that's just like that little piece that you may not know. I have clients that are actually in Germany now. And, one of the things I asked them about, I said, so when is your flight back? Because I know that when they fly back, there's going to be a period of at least 48 hours where I'm not going to be able to contact them, and they probably will not be able to contact me. But that's something that I know about because I've lived it. You know what I mean?
Yeah, that is good to know. So right now the lender is here. His name is Jason Steer, y'all. He is wonderful as a lender. He is with Movement Mortgage, and he's better known as the VA Boss. So let us welcome Jason Steer. Let us welcome.
Hey, Jason.
Hey, Jason. How are you doing?
I'm well. How are you?
I'm doing really good. Thank you so much for agreeing and welcoming to my podcast. I really appreciate that.
Fantastic. Thanks for having me.
You're welcome. And we also have Victoria here. She's all of us are MRP certified, and she's a military spouse, and she is definitely has a niche with working with veterans.
Yeah, I heard you're in the Virginia area, right?
I am in the Virginia area. Yes,
yeah, fantastic.
It's also home for me. I'm from here, so
okay.
It takes me back. Not so often we get the PCS back to where we're from.
Hey, for once the military got it right?
Yes, I did. So, Jason, it's when you're doing a VA loan. Right now, the VA loan as a whole sometimes has a bad rep. Is this and this. So,
for sure. You
as a VA loan officer, explain to the audience the different bases that you have been to talk about the VA loan. It's in Texas, or what states you are in right now.
I've been in the mortgage industry almost 20 years.
Mm-hmm.
Wow.
And so I made a commitment probably 5 or 6 years ago to commit my business to military veteran community only. That's all I do. And what I saw was a lack of education. Okay. And there's still a lack of education. And so I'm licensed personally in 13 states. So I do business all across the country. Before COVID, I used to travel a lot and speak at real estate boards and all kinds of things, educating people on the VA home loan benefit. Because I'm sure, as you ladies have probably seen, especially being in Virginia, which is craziness, right? Especially in the Hampton Roads, Virginia, Norfolk, all that.
They're everywhere.
Bananas, right?
You throw a stone, you're going to hit a service member.
The largest concentration of active military in the country. So, but it's still, even in places like that where one might assume that there's a lot of VA knowledge, there's just not.
There's not. There's really, really not. And that's one thing I pride myself and my team on, first of all, just general education for buying a house. That's the first and foremost.
Yes.
And two, it's like the VA loan, or just understanding how it is to work with the military. So, there are certifications out there that anybody can get, right? But there's no greater certification than experience.
I heard you say, talking about the PCS process, right? And and what I teach agents, what I teach other loan officers, is that to truly understand the military, dig into the PCS process and what it means, right?
Absolutely.
And not just the logistics, right? You're coming back from Japan, Korea, Germany, all these different places, but what that does emotionally to a family coming back from overseas, right? So if I'm explaining that to an agent or talking to a client, what I want them to understand is that we understand them. Right. We understand that military move, and both of my teammates that work with me are both military spouses. And I made a commitment in my business to only hire military spouses.
Okay.
And the reason being is because I never served. I don't have that connection as a spouse or a service member. But what I can do is try to, the best I can, to understand what you have to go through when it comes to making a PCS move. Mm-hmm. And I talk to spouses all over the country, all over the world. And when we talk to them about our responsibilities and what we can control, what we can control is the experience that they have.
Absolutely.
And so when we do that, we want to try to take some of that stress off you. So what I want you to focus on is getting your family back from overseas. You let the team that you hired to complete this transaction for you take care of the things that we can take care of. I want you to focus on moving your family. because that's what's most important.
Because let me tell you, that move. So my husband, like, it's just me and my husband right now, right? And I have seen people make the move with children.
Oh.
And just to give like a little piece of it, when we first got to Germany, we lived in a hotel for 46 days.
Oh, wow.
Oh.
And that's with no kids. Imagine this scenario. I talked to talked to a gal today who is in your area in Fort Eustis, this PCS in El Paso.
Oh.
She got 5 kids.
I believe it.
Oh,
right?
wow.
You're talking about timing, not to be put in TLF or temporary lodging for those.
Yes.
Something like that. That is not fun.
It's not. It's, you know what? It's not fun. Like when we were in the way like lodging overseas works. So like they have the hotel rooms where it's like a regular hotel room, but a little kitchenette inside of it, right? But then they have the suites, and the suites are reserved for families, right? So like I'll never forget. My husband and I, we had just got there, and there was another family that, oh, mind you, we also had to take a 4-hour bus ride from Ramstein. Okay. So not only did we fly 10 hours, we had to take this long bus ride all the way down
to Grafenville, right?
Right.
So
this family was up there, and this spouse, she had to be like 38 weeks pregnant. She looked like she was gonna pop at any time. But they had 3 little kids.
Bless their
so
heart.
I remember my husband and I, we would see them in the hotel, and then like they just disappeared. And then like they like disappeared for like a week. And I was like, I haven't seen that family. Hopefully they got housing, because that's why you're in the hotel. You're in the hotel either because you don't have housing or you're on your way out the door.
You're waiting on your housing to come.
Right. So either you're waiting for the bus to come to take you back up to Ramstein, or you are waiting on housing. Right.
So let me ask y'all something. The difference between Victoria, my veteran clients, they're not PCS, and they're either already retired. So is there a different way that you process it from PCSing the loan, or is still the same? Or
I mean, for me on my end, I want to try to keep it simple.
Okay.
Number one, because I think one of the misnomers about the VA process is there's a lot of paperwork, that it's convoluted and confusing and all these moving parts to confuse people. It's really not that. I think we like to make it that way sometimes. I think we as humans like to complicate things, honestly, to make ourselves sound smart. That's what I think. And so what I like to do is kind of deconstruct the process and only give, I only take and try to get the documents.
Oh, okay.
I don't try to paperwork people just for the sake of paperworking you.
Okay.
Right. So for example, if I've got a 100% disabled client, okay, here in the state of Texas. So I get his disability letter, a bank statement, a copy of his driver's license. That's it. Nothing else.
So since do you get his disability letter? So then later on down the line, you will get his tax returns and stuff like that? Or
nope.
But what if we
don't ask for any of that because it's not required.
Because he's 100% or?
Yeah, he doesn't file taxes.
Oh, okay.
Right.
Okay.
And probably hasn't, at least he's been for a couple of years. But if we're only using that, let's say he just became 100% disabled and he has a normal job, right? Let's say he works at Lockheed there in Fort Worth.
Okay.
If I don't need his Lockheed income to qualify him, I'm not asking for that.
Okay.
I don't want it. I don't need it because the VA doesn't care.
Okay, so let me ask you something. When you qualify the veteran that's 100%, like me, do you give them the max approval? Or I guess what I'm trying to say is, like, some people say I can qualify for more house because I don't have any property taxes. So how do you do that?
So when I have a buyer consult, okay, so after we fill out all the paperwork, we get everything we need. I set some time aside that's scheduled to go through their approval process with them. We talk about payments, we talk about budgets, we talk about all, because sometimes those two don't always coincide, right? They may be shopping for houses looking at $350 when they really want to make that $250 payment. So sometimes those two don't always match up. And so we talk about payment, we talk about budget, and then what I talk about, what I like to call stretch budget. So in these markets, you ladies know that if I've got a budget set at 300 and I'm like, that's all I'm going. Well, sometimes if I'm out shopping at 9:00 at night on a Saturday and I'm ready to write an offer, but I found a house for $310,
it could be different.
Right.
Yeah.
I want you to know that you can afford it, and I want you to know that you can qualify for it.
Okay.
So I asked 2 questions to my lenders in this market. How much, like if they say that they want to keep their mortgage payment around $1,800, what does that look like?
Yes, that's what I
And
do
what's your
too.
max?
Yep,
Yeah.
for sure.
Right? Because, and then I have that conversation, it's about having a tough conversation with the client, right? So your max, like you max want to spend $1,800 a month. Cool. That's going to equate you to $280, right?
Maybe
Don't quote me
$290.
on these numbers. I'm not quite sure. Okay.
Right.
Don't quote me. Okay. The loan boss is down there.
Yeah, he's down at the bottom. Yeah,
got
he's down at the bottom.
But so like in our market, so like if you want to spend like $1,800, right? You're looking at maybe a purchase price of $325, right? But let's say the house that you found that you absolutely love is $375. But that's taking you out of your price point. So then my question to the client is this the house we're going to throw everything to the wall or not?
Yep.
Because
But
if it's not the one, then let's just keep moving. You know what I'm saying? Because I always figure out what the plan is, what the time frame is, right?
Always.
It takes anywhere from 30 to 45 days to close, and counting holidays and weekends and all that.
Yes.
Yep.
Yes.
So if your lease is up in August, we need to start looking now. Okay,
Yeah,
we need to figure everything out now because we're gonna get a few denials. We're gonna get a few not accepted offers. We may have to go back to the drawing board. We may have to create another plan. But let me tell you how quickly the next 5 months are gonna go by before your lease is up. You know what I'm saying? So like, I'm gonna do everything I can to keep you at that price point. But in the event that we find the one that checks off every single box and it's above what you wanted to spend, are you comfortable with throwing everything to the wall?
I think that's a very important point because I think some people only look at this as in the here and now.
That's it.
What am I doing right now?
Right.
You know that if it's an active member or even a veteran, they may move every 5, 6, 7, 10 years, whatever that looks like. And so having that conversation and making it as an investment, like, okay, if you spent $375, your payment's going to go up a couple $100.
Right.
Now, is that going to make you house poor? Okay, let's talk about that.
Because I'm not about that, and I'm not the agent to do it to you, okay?
Too much stress, right? I'm not here to make you house poor. Nobody wants to write that check a month and go, oh my God, I don't want to do it. Or look at it from an investment standpoint, right? If this is an active duty member, especially in your area, that is going to be there 4 or 5 years, they may decide to sell 5 years from now and move on to the next one.
And move on.
Well, am I willing to invest a couple $100 a month in that home to make a bigger return on my investment 4 years down the road?
Yes.
And I think that's sometimes where people fall short. They only look at right in front of their nose and not 5 years down the road.
So I have a question for you, Jason. So I am not an advocate of this appraisal gap thing that's going on here.
Me either.
To be
And I'm
honest
gonna
with
tell
you,
you
I don't
why.
like it either.
Me either.
Especially in my market.
Yeah.
Okay.
I don't like it.
So I deal with a ton of active duty military, right? I can tell you the Army, more than likely, you're going to move every 3 years. Okay.
For sure.
That's just what the Army does.
Yes.
The Air Force, you can be somewhere for 6, 7 years. The Navy, the same way. I had a brother-in-law. He was the same duty station in the Navy for like 7, 8 years.
Oh, wow.
Okay.
That's
So
a
you
long
can
time.
do that,
That's
right?
a long time.
That it is a long time, right?
It is.
So my thing is, and this is why I'm not a fan of the appraisal gap. If you are not going to be in this house for 5 years plus, then don't do it. Because there's no guarantee that you're gonna, I mean, shoot, even in 3 years, there's no guarantee you're gonna get that money back. Right?
Yep,
If this is not a long-term, now if you're buying this house, if you're like, look, I got 3 years left, I'm retiring out of Fort
Yes,
I'm
that's the
retiring out of
difference.
Langley, I'm retiring here, and
Yes.
I'm gonna be here for the next 5 to 6 years.
Mhm.
Let's throw it all to the wall.
Yeah.
You know what I'm saying?
I
Because
agree.
you're making that long-term investment.
Yep.
But if you're not going to be here that long, then don't do it.
And so there are two conversations that I have. And one of them is one you just said, like, what's your plan if you PCS or move? Or even if you PCS, are you going to retain that home as a rental property, right? What's your short-term and long-term investment plan with the house?
So I have a question with that.
Yep.
So if they PCS and they keep it for a rental property, the only way they can buy another house where they go you can still have, but it's the balance what's left on their VA loan, right?
Correct. So what we'll do is we have that entitlement, conversation. So let's say they're in, around your area in the Hampton Roads area and buy 300,000. Okay. And then they're going to go to, they PCS to somewhere in Florida or something like that. So we have that. So this is what it's going to look like when you PCS. This is a remaining balance of your entitlement. You can certainly exceed if you want to. It just triggers a down payment requirement. Right. This is what you have left over. Okay. So what I do is I like to go through it from a visual perspective, right? It's like, okay, this is what your entitlement looks like going forward. These are a couple of scenarios for you. But if you're going to pay over the asking price, which is a strategy, I'm not sure that it's a good one sometimes, but it is a strategy.
Depends on the area.
I actually have a software that will show them if they pay $15,000 over based on historical appreciation rates, not these crazy ones we've been experiencing now.
Okay.
But historical appreciation rates, how long it's going to take them to break even in doing that. So if it takes them 3 or 4 years to break even and they're going to PCS in 4 years, nobody really wants to break even on an investment per se, but you also take the tax benefits of owning and the principal reduction of building that little nest egg as far as an savings account that we have. So the rent, the interest rate on rent's 100%, right? I'm a big advocate of home ownership, especially military home ownership, because the government gives you guys BAH for a reason.
Okay, Jason, let me tell you, you speaking my language, okay? That is like one of the, let me tell you, my dad is also an agent, and I love him to death. But that is one of the things that he told me a long time ago. He said when he's out here helping younger military buyers, because he's also a veteran himself, and he lets them know, he's like, if your BAH is $1,800,
yes,
and you take $1,800 and you go and you rent a place, where is that going to put you?
That's
true. What I mean?
Yeah,
so this is my thing.
Is true.
If Uncle Sam, because that's what I call him, he's my uncle. He call him Uncle Sam.
Yeah, we all call
So if Uncle Sam is gonna give you $1,600 a month to buy a house, technically, or to pay your BAA, to pay your basic housing allowance, right? You should take 75% of that $1,600, and that should be the cap for your mortgage, and the other 25% should pay your utility bills.
Yep, I agree.
So the 75% of the BAH. So that's right,
because with me, the BAH is your basic housing allowance.
Right, it is.
Now, granted, you may have other bills and things like that, which is great. But if they're giving you this much money, then you should really only be using 75% of that to buy your house. So therefore, the other 25% you can use it for your utility bills.
Yeah.
So therefore, you're not touching your base, your base pay. Yeah. Right. Honestly, that's what it is.
So now that you brought that up, let me ask you this. I want to get your opinion on this. So when that that soldier or the Navy, Air Force, when they ask you, or they make the comment, well, if the market's too crazy, I'm just going to rent. What do you tell them because I know what I say. I want to hear what you guys say when you have that conversation, because it's tough, right, to convince people that, because the market, they watch the news, they talk to their friends, yes, and everything's crazy, and some people paying $30,000-$40,000 over the sales price and all this nonsense.
So for me,
what do you tell them?
Like now, I do have 2 clients there in the North Carolina area. The one guy that's waiting.
Yep.
So I talked to him, and sometimes they be like, well, I need to rent for a year just to see how the market is going, or just to see, or the price of the houses may come down. But sometimes people, they listen to other folks. Oh, don't buy yet. Just do that. But then when they find out that they get in there and they rent it, some of them be like, well, I guess I should have bought a house. But my question to them is, well, how long are you going to be here? Well, I think I'll be here for about a year or two. Then I'll say, well, you might want to, think about renting or something like that. That's just me, but everything is up to you. But if they come to me and say, this is my last duty station, then I'll be like, you need to think about renting. Now, I will say, because some of them do want a new bill when it's their last duty station.
Mm-hmm.
And so I'll say, well, my recommendation to you is to go ahead and get a rental. And 45 months into your rental, we'll start looking for the new bill. So by the time your lease is up, you know, your house may or may not be ready. So that is some of the things that I say to them. What do you say to them, Victoria?
So I asked them, well, do you do investments?
Mm-hmm.
You invest in crypto and stock and you trade on the market?
Yeah.
Isn't that a risk?
Okay.
So you take that money and you risk it there. Why wouldn't you put it towards something that is a substantial investment that 99.9% of the time is going to gain appreciation?
Yeah.
That's true.
I mean, that
especially
you can do
now.
long term.
Especially now.
Right. So, you know, I talk to people. I'm like, look, you're human. You're going to talk to your friends. You're going to do all this and you're going to do all that. But remember, their transaction is not like yours.
Nope.
And their situation is not yours.
Their credit is
right?
different.
So at the same time, it's, you can rent, but when you go ahead and you rent, don't be unhappy with what's out there, right? If you're okay with spending $1,600 in rent, you're paying a mortgage. You're still paying a mortgage. You're just paying
somebody else's mortgage.
You're paying to invest in somebody else.
Yep.
Do you want to invest in yourself? And then I had a client went to bat. Okay. He was so adamant that his friends knew exactly how the market is. And I asked him and I said, well, do your friends own a house? And they're like, oh no, they rent. Well, why do they rent? Oh, I'm not quite sure. Well, you should ask them that.
Yeah.
So he went and he asked them and he came back and he said, well, they rent because they didn't have money for a down payment and a closing costs. I said, okay, well, you're military, so you don't have a down payment. And you and I have discussed your finances, so you do have money for a closing costs. So you're listening to somebody who doesn't have the same mindset as you. You're listening to somebody who doesn't have the same thought process as you. And sometimes, and I've even, you know, I'm really honest with my clients. There's no reason for me to lie.
No, it's not.
Don't let someone else's inability to buy a house create your inability to buy a house.
Exactly.
Yeah. Well, this is what I talked, and I actually was out at an El Paso about 3 weeks ago, and I met with a group of soldiers out there. And what I like to talk to them about is building wealth through the VA home loan. Right? If you're going to spend your career in the military, and the government's going to move you, spend all those millions of dollars training you, doing all those things, take advantage of the benefit that they're giving you. Right? So I tell them, I use myself as an example. Look, I'm a civilian. If I were to move every 4 years and buy homes, if I could own 3 homes underneath the conforming loan limit and put no money down on these things, I would do it in a heartbeat. It would cost me $120,000 in cash just in down payments. Okay. Right. So if I'm buying the same sales price as they're buying, it would cost me that much because I'm going to put 20% down. I'm going to avoid PMI. I'm going to do all that kind of stuff.
So the veteran still can put, well, of course, a VA loan, they still can put down the 20% or whatever.
According to the VA stats, and this came from John Bell III, who is the deputy director of the VA.
Okay.
This is when an interview that he actually did with the NAR about a month ago.
Oh.
Okay. Is that 25 or so % of VA loans nationally, purchase loans, had a down payment, 25%. Okay. Because,
why is that?
Because the benefit is this, is that if I just talked to a guy in the Air Force today that's moving from Tyndall Air Force Base to El Paso. He's a TACP. Okay. And he's going to net $115,000 on the sale of his home in Panama City Beach. He's owned it for 3 years. 3 years.
That's crazy.
So I told him, like, look, I know you don't really want to put a down payment down, and I don't want you to do that. What I want you to do is take some of that money, find a financial planner who's military friendly, and make some money on your money. That's number one.
So I'm glad you said that you don't like. So do you not like military to put down a down payment? Because I'm on the fence with that. Because
it depends on the situation. So I'm going to give you the example where I like it. Here's where I like it. let's say I've got a guy buying in Labrita in our area. Say they're buying. I've got a guy now that's buying a $600,000 house. Okay, subsequent use funding fee.
Okay. Oh.
Okay, so over $20,000 in the funding fee. No exemptions, none of that. So I'm like, you can put 5% down and you can get a cheaper funding fee, or you can pay your funding fee in cash at closing. You choose.
How do they do that? Pay the funding fee in cash?
We just flip it to a closing cost and it's not financed. So they pay it like a normal closing cost at closing.
Oh, okay.
So it keeps them from absorbing, 20 grand into their loan and starting 20 grand in the hole, so to speak. Or they can put 5% down and lower it down to 1.65%. So they almost take 2% off of that funding fee.
So let me ask you something. I'm sorry.
Go ahead.
So let me ask you something. Like the interest rate now is what, 3.9 or 3?
It's above 4%.
Oh. So if a veteran want to come in
at 4.125.
So if a veteran come in and say, I want to buy my points down, how much do you allow to them to buy down?
So that's a great question, and it's a very lengthy conversation. I'll give you the short answer though.
Okay.
Buying points is an investment. Okay. It's an investment. Let's say I've got active duty, and I just had one in your area, Victoria, and he was like, well, I'm going to be here 4 years, but I really want to pay this. I'm like, I said, but look, we as consumers have been conditioned to look at interest rate, and that only. We don't look at the cost of said rate. Okay.
Oh, I know what you're going to say, because I had this conversation with another buyer. Go ahead. I know what you're going to say.
So I'm like, there's a lot of lenders out there who put these low rates out there, but they don't tell you what it's costing you.
They back off.
You get into your loan process, and that you're thinking, oh my God, my closing costs on a $300,000 loan are $16,000.
Origination fees and discount points and stuff like that.
Right? It's artificially buying the rate down. Because if you take the difference between the undiscounted rate and the discounted rate in the payment. Okay, so let's say that's $50. $50.
If that.
$600 a year. Okay, intangible cost. But I'm only going to be there for 4 years, and that buy down is going to cost me $3,000. Well,
it's not worth it.
Is $2,400. You're losing money. Why would you want to do that?
I knew you were going to say that, because I had that conversation with one of my lenders here in the buyer, and he was like, the lender, he literally said, just so you can have the clout to walk through someone else's door and say, I got an interest rate of this, does not make sense when you look at the long term of it. And he broke it down. He was like, you coming down a half a point is going to cost you, I think it was like $5 or $6,000.
But it's not even going to take the payments down like they think it's going to take. And I think that's the problem.
It only took his payments down like
$20.
Right. It was crazy. It was crazy. It took his payments down so low, it didn't even make sense.
So he wasted $5,000. And he
didn't waste nothing, because I told him it wasn't smart. So he didn't do it. He agreed.
But they don't see that, right? It's like all they see is, oh my God, Navy Fed is giving me X. But they don't see the things that come behind it, because, and this is my opinion, this is my professional opinion as someone who's done this for 20 years. Right. They lack the knowledge to have the conversation.
Or it's honestly, so my husband knows this is been my soapbox for the past few days. It's agents not wanting to take the time to educate them. It's agents looking at it and they're just like, oh, this is great. Let me get this new client. Let me get this buyer. Yes. Oh my gosh, I have a new buyer. No, sit down and take the time. If my buyer does not want to go through a buyer consultation, I am so sorry for you, but you're going to have to find another agent. That's my stopping point.
I mean, it's at the point now that
I can't just take
conventional. Oh, the seller, they only going to accept conventional. So let me ask you something. You was talking about buying down the points and the interest rates. You as I or anybody else, is there a down payment assistance available to veterans programs?
Depends on the state. It typically obviously covers closing costs because there's no down payment required.
Okay.
But here's the thing with that is that, and when you're talking about the conventional versus VA conversation, like because I've had this conversation literally daily, is that I'll talk to a listing agent and what they say to me is, well, I weirdly wish they had put down a down payment because that would make my seller feel better.
I don't get that.
But the seller feeling better is not convenient for my buyer.
So I just did a video
right.
on this about
I
2
mean-
weeks ago. And what I did, and this is what I said to people, I'm like, you have the emotional response and you have the business response. Okay. And I'm like, okay, fair enough statement. Your seller's entitled to feel that way. I said, but since we're arguing the emotional response, okay, here's my response. Is that my client's service to this country and signing his name on the dotted line?
Absolutely.
Is the down payment. Absolutely.
Is the down payment. Absolutely.
The sellers want for a down payment. That's
But
number one.
I've also noticed that there's a lot of, so I had to literally educate a listing agent on the VA loan. And it really irritated me. And this is why it irritated me.
It irritates me every day.
Because this has been my soapbox. Because they had this little designation behind their name.
Mm-hmm.
And it infuriated me so much because just because you take a 6-hour continuing education course and you get this designation behind your name does not mean that you have the understanding about what it really is. And so when I had a breakdown to that listing agent, what a VA loan was and where it came from, because her first comment was my client doesn't want to take Virginia loans. And I said, excuse me? A what?
Oh, no.
Yeah. Well, you know,
I said a VA loan.
Oh no!
She was like, "Yeah, we don't want to deal with the Virginia Housing Assistance loans."
Oh,
I said, first of all, ma'am, that's called VHDA, and it's Virginia Down Payment Housing Assistance Program. That's what the loan is called. That's what it's called. Okay. Second of all, VA stands for Veteran Administration.
And you know the thing about it is with the VA loans, it takes too long to close.
It takes I closed one in 21 days.
I just did a loan in your area for a friend of mine who's an agent there, and we took it from start to finish. And this was a condo, by the way, start to finish in 13 days.
Oh,
it's possible as long as people know what they're doing. But what happens is, and I hate to say this, what happens is sometimes people get the clout that, oh, this is this, and I know this, and this is here, and I've done this, but nothing beats experience.
Nothing.
You know, like nothing beats experience, because guess what? My husband and I have purchased a house VA loan. We've sold a house with a VA loan and purchased another house with a VA loan. Not only have we done that ourselves and we've gone through it, guess what? I help people with it every single day. I talk to lenders and agents about it every single day. It's something that I go through on a daily basis. So when someone comes to me and says, hey, Victoria, I'm coming from Texas and I want to keep my house there, but I bought that with a VA loan. Cool beans. The lender is going to need a copy of the lease.
Mm-hmm.
Yes. So
and they're like, oh, well, I mean, no one else. The lender needs a copy of the lease.
Much of the lease?
So they can negate that income. Well, they can negate that payment. And if your payment, let's say your mortgage payment is $1,200, but you're renting your house out for $1,800, they need that $600 income and credit it to what you make yearly.
Yes.
So for me, or it's just like, well, we're going to sell our house there and we're going to buy a house here. Okay, the lender is going to need to sign ALTA between the seller and the buyer before closing.
And they got to have a contract. They got to have everything, because sometimes you can do a double closing. But this market now is
I send the money from one title company to the next title company.
Yeah.
Oh, yes, you can. I just told somebody that yesterday that when they close on that house, they can send that money to the title company. It does not have to come in your hand.
And they get the residual at the end, and it takes that stress off of them trying to get to the bank or trying to wire, trying to do this. And
tax purposes,
experience trumps everything. And it's just like when that agent said what they said, it made me so upset, because I was like, my veterans, other veterans, even if I'm not their agent or not, you know what I'm saying? I am married to a service member. My father-in-law, my brother-in-laws, like, you know, we're all in the, you know, I have a huge military family. Yeah. And so what makes me upset is I have friends in the military in other states, you know, and it sucks that they have to go through this situation here. You know what I'm saying?
Yep.
But I do have a question for you, Jason.
Okay.
So if you have a dual military couple and one is out of the military and they receive disability and the other one is still active duty, how do you structure that loan best for the client?
Well, typically I will put the one who has a disability first, so they'll be exempt from the funding fee. Number one, always. Doesn't matter if that's their only source of income. If they're not the main breadwinner, doesn't matter, because the VA loan doesn't work that way. So I have veterans who have no job, right? They're on the GI Bill going back to school. But they have, they receive, like, let's say they have a 10% rating and they're getting $247 a month. They're still number one on the loan because they're exempt from the funding fee.
But the qualification will come from the other income of the other person.
Yeah, for sure. So
that's so important to know.
Okay.
Yeah, so because and what you can also do, and they changed this back in 2019, is if you have a dual military buyers that aren't married, okay, not married, you can have dual military buyers split entitlement, and it's no longer a joint loan that has to go to the VA. We can underwrite the loan and close it before we don't have to send it to the VA to underwrite anymore.
So, but will it still be a VA loan?
Yeah. So you basically just take their entitlement and split it in half. Okay. But a lot of lenders, I just answered this question for a lender the other day because he was getting pushback from people. But going back to your lease agreement thing, there's a mistake that lenders make when it comes to lease agreements. They will apply the conventional rule to the lease agreement. So what the conventional rule, what Fannie Mae says, that you can use 75% of that lease agreement to offset the payment. 75%. So if I've got $1,000 payment, I can use $750.
Okay.
Okay.
The VA is 100%. Some people will apply that 75% rule. So take this example. If you've got an active duty person that has a house that they're renting out, that $250 a month per se could make or break them qualifying for a new loan. They might not pass residual. So I've seen a lot of lenders do that. Okay. Well, what they can also do, even outside of having a lease agreement, they can determine what's fair market rent for that property and use it without a lease agreement. Because if you tell me, Victoria, that you're leaving and you can rent that house for $1,500 a month, but you're not going to lease it just yet, you want to wait till you exit to lease.
Right.
I can get something that gives me fair market rent, and I can use that in lieu of a lease agreement.
Oh, wow. Oh,
I've done a management agreement in lieu of a lease agreement.
Yep. And what that does, because it's a management agreement, because what the VA really loves is for somebody to have a property manager, okay, or management experience. So when you have those things, it makes the VA feel better, especially when you're going from multifamily. So this is another great thing to teach people to invest. They could go in and buy a duplex.
Live on one side, right?
Mm-hmm.
Live on one side, rent out the others, offset all their payment, and make money on it.
Okay, so let me ask you a question, because I just got this call the other day. So for somebody in Killeen, that exact purpose, they bought the duplex, they living on one side.
Yep.
Now she wants to buy another house. Can she? But that's the VA loan. How will that work?
So it's two questions. It's entitlement question. How much entitlement does she have left over? Okay, we do that calculation from the certificate of eligibility.
Okay.
And then we look at, okay, are you going to lease it? We take the lease agreement she already has in place. It may be enough to offset all that.
Both sides.
She gets another one. It's offset the payments entirely, and she qualifies for the new payment without the old payment hurting her.
So how long do they have to live in that property before they can buy one in the same area?
So what the VA says is that if there is a need, right? So let's say her family dynamic changed. Okay, let's say she got married and she lived in a duplex that was 1,100 square feet, kids, new husband, whatever that looks like. That's not adequate. You can live in that house for 2 months and buy a house literally right down the street and close on it, no problem.
With that same VA loan, with the leftover entitlements, and she can lease that out?
Yep, and buy literally a house.
Because her status changed, right?
Because her status changed.
Okay.
Right? So let's say that you have, and the reason they do that, it's not like FHA. People confuse that because FHA has that 100-mile proximity thing. VA does not have that. You can buy a house literally 2 doors down if it fits your needs.
Okay. Okay.
So that's a big distinction to make as service members get married, as they progress in their careers, they have kids, they do things like that. They may not be adequate housing anymore, right? The only thing you have to watch out for, and this is where it becomes a little tricky. I had this situation, guy coming back from Germany. He bought a house sight unseen. Okay.
Wow.
And when he got here, it wasn't that the house was bad, but literally the house next door, which is the one he really wanted, wasn't on the market. Well, it came on the market when he got back. Single guy, no family dynamic changes, no nothing. You can't do that. He has to live in that house for at least 12 months. Okay? Because that's what the rule says, and that's what your deed's going to say.
Yeah.
Okay? So there's a deed restriction on there. But the VA is not going to hold anybody's feet to the fire or throw you in VA jail. If you've got a active service member that gets orders 8 months after they get there and they got to move.
Woo, that happens all the time.
It happens all the time. So
The needs of the military trump anything that anybody else wants.
Okay, let me ask you a question. When you was talking about like condos, the complex itself has to qualify for the VA loan, or
if it's not already approved, the complex has to be approved by the VA.
Okay. What if that complex is not approved by the VA and a client finds a condo? How will that work?
So what I typically encourage the agents to do is reach out to the HOA, and I'm going to give them some questions to ask.
Okay.
Right?
Ooh, yes.
Or this is what I'd rather do.
There.
Okay. This is what I prefer, because we actually have at Movement, we have a condo team that does all of that.
Okay.
What I will do is hook their their contact up with our contact. Okay. Let them speak the condo speak that we don't understand.
Right.
And decide, yep, they check all the boxes. We can do this. We are going to pay, let's say, because a lot of condo associations will actually charge you for the condo docs.
Yeah.
Okay.
They do. Yes,
they do.
Crazy, especially out there where you're at, Victoria. Condos are very popular, obviously. So
there's a ton of them. And half of them, 25% of them are only VA FHA approved.
Yeah.
I've had to go through that condo questionnaire sheet. I couldn't tell you how many times.
Wow.
Yeah. But Movement will pay for that cost. We absorb that for the service member.
Okay. That's a good thing to know.
Okay. And then I let the condo people deal with the HOA.
With the document.
We get everything done. We send it in for approval. We take care of all that. And here's the thing with the VA and approving a condo complex. If you know what you're doing and you get the right information, the right order and all that stuff, because it's only about 8 documents. That's it. Okay. It's very easy. It's not like FHA and conventional. And you send that in, you can probably have a condo approval in 5 to 7 business days.
Okay. So let me ask you something to somebody that's looking. The documents that you need for a E5 trying to buy a house, is it still the tax returns and they're on active duty?
That's a great question. I'm glad you asked that, because if you're active duty, tax returns are not required, number one. And the VA doesn't even require W-2s. So if you're an E5 and I'm getting your paperwork, I'm asking for your LES, a copy of your most recent 30-day bank statement, and a copy of your driver's license and a copy of your PCS orders. That's it.
That's very interesting.
And of course, the credit.
You don't need your W-2s?
No
W-2s are not required.
Because active duty.
So why do they ask for them?
Because lenders want them. We do not. I don't ask for them ever.
Oh, so how do y'all figure out their income?
Because Fannie doesn't matter, right? Because W-2 is W-2. And when you're talking about satisfying Ginnie Mae, which is the insurer of all VA loans, they don't care.
You know who I call, it's not to segue, but I want to give you guys a little funny here, right? So I teach real estate school down here. And I call them our aunts and our uncles. We got Fannie, Freddie, and Ginny.
Yeah, that's right. Jenny's the old lady in the corner knitting. That's what she is.
Right. Yeah. And they absolutely laugh. I said, are you guys ready to meet our aunts and uncles? And they're like, oh, wow. What?
Yeah.
But it's just the lack of education for a VA loan, like for active duty. Now, if that person wasn't active duty, they got out. What will they need for documents then? They're out of the military.
If they've got a regular W-2 job, let's say they're working for the government or whatever,
Mm-hmm.
all we need is W-2s, no tax returns. The only time tax returns are required is if you have somebody who's self-employed, okay? Somebody who has what's considered variable income. So they work, the roller coaster income, as I like to call it. And that's really about it.
So let me ask you something. With the VA loan, why does it get a bad rap, or why all of a sudden it has a bad rap? Because at one time that's what the sellers wanted. Oh, they're veterans or whatever. So what changed?
I think the industry has given it a black eye. I think and it's on both sides. This is loan officers and realtors. I think the lack of education, I think, is a huge thing.
Huge.
I think that we are industry watchdogs, as I like to call them, the NAR and people like in the CFPB even do a terrible job at requiring the continuing education or anything like that, because they don't want to push the narrative. Is
it too time consuming and stuff like that? Or
what it is it's not. I own a company with a couple other people called Veteran Mortgage Advisor. And we literally travel the country and speak to credit unions and loan officer groups and all things on our dime, on our time. They pay us to come in and do it, but we'll go in and educate them. I don't care who you work for, because at the end of the day, if I educate you and you take one thing away from that and you help a service member execute on that benefit that they rightfully earned, that's all I care about. I don't care.
My biggest gripe when people come to talking about the VA loan and it's not good and it's not that, so my team motto, right? It's educating you through the journey, right? So that's what we do, is we educate our clients, which is why it's so important that if a client is not willing to sit down with myself or my buyer's agent, whether they're buying, selling, whatever it is, if you're not willing to sit down and have that consultation, so therefore I can educate you on what's going to happen and how it's going to happen and what you need, then it doesn't matter. When I educate you on the funding fee, I had a buyer that was, okay, so I have to pay my funding fee up front. I said, that's your option. He's like, no, but I have to. I said, no, that is your option.
That's what the lender probably required.
But I also, so let me tell, so how the contract is written in Tennessee, there is a checkbox on our VA FHA form that states whether the buyer can pay their funding fee up front with their closing, or they can roll it in their loan.
Yep.
So I had a client, it's my client's contract. I'm taking him through the contract. I asked him, I said, who do you want and how do you want your funding fee paid? This was the second sale I ever did. Okay. We checked the box to be paid for by the seller. Well, it wasn't until, I was still very new. I was like I said, this is my second transaction. So my brokers were still mentoring and educating me through, the contracts and things like that. And so it was going through my broker review. That's just what it was. It was the second one. And I'll never forget, she called me in her office and she said, Victoria, does the listing agent know that the seller is paying the VA funding fee? And I was like, what was on the contract? He should have read it.
So the funding fee is closing costs for the seller. I mean, is it a lot? Yes. It depends on the amount of the house again, or?
Yes. Let me tell you, that seller had to come out of pocket and pay my buyer's VA funding fee.
Well, it's good for your buyer.
It was great for my buyer. But that listing agent was sweating bullets when I called him, because my broker was like,
it's signed, it's done.
Well, when you talk about fees and things like that, most people don't know that the funding fee can be paid by the seller, including seller concessions, with 4% of the purchase price. Okay, that's the rule.
Oh.
So, but there are states out there in their state contracts that stipulate in their state contract that the seller has to pay for the termite inspection.
Oh, yes. That's a good question.
That's very true.
In Texas, do they have to pay for the termite inspection?
No,
because some sellers was like, nope, that's on the buyer.
No.
And in Virginia, you can check either the box. So there's a box.
Yep.
It's under DWI, wood destroying insect, right? Because everyone calls it termites, and I'm like, yeah, termite inspection, but it's really DWI.
We don't have that box here. Yeah.
So it's either the buyer or the seller can order it, and then either the buyer or the seller can pay for it. So that's how it. So in Hampton Roads, right? Because there's different contracts all throughout the state, but in Hampton Roads, that's how it is.
Yep. A lot of states will stipulate that there is no option. And
they just make the sellers pay for it.
We've lobbied their real estate associations to have it changed, simply because what I feel as a professional, and what I consider myself a defender of that benefit, that all it does is it just shows people and it keeps kicking that can down the road. Because the rule is that as long as the lender's not charging a 1% origination fee, every fee in that transaction is allowable for the veteran to pay. Period.
So you brought up you said the word fee. Okay.
That's right. Yeah.
So you said the word fee.
Mm-hmm.
Question. I like working with lenders that are transparent and provide a fee sheet. Right?
Yes.
The lenders that I work with, they know when they send over my buyer's pre-approval, I better see a fee sheet in it.
Yep.
Okay.
Sure.
And so those are the ones that I work with. They know. They send it over and it breaks it down, because one thing that irritates me is the closing cost narrative. Like, oh, VA loans, there's no closing costs. I don't have to bring any money. No, actually you do, because the closing costs are the fees associated with closing your loan. You don't have to get all the time. But you do have closing costs, which is like the thing we always have to go through.
Yep.
And the reason why I like the fee sheet is because it breaks it down, right?
For sure.
And I feel as though if a lender cannot produce a fee sheet to show that veteran what they're really paying in closing costs, then there's something going on. And you even said it earlier. They build in the discount point payoff.
They do.
So when I had I'm not going to say the name of the mortgage company, but I had a mortgage company that he said, I am not providing you a fee sheet. It's not happening until I have a purchase price. I said, well, I'm not providing you a contract and I'm going to take my client elsewhere. So I guess we're a cellmate, aren't we? He produced the fee sheet shortly after, but when he produced it, I showed it to my client and I said, this is why he wouldn't show us.
They typically have something to hide.
Because they pulled in the discount points and the origination fee was outlandish.
Yeah.
So let me ask you something. What are the required fees for a veteran or anybody to pay when to closing? There are some fees that they are required to pay. So what are some of the fees that what are the required fees? There
are no required fees for a veteran to pay. There's no required fees to a seller to pay, right? If you're in that negotiation process and like to Victoria's point, what your lender is charging. So like we do not charge any lender fees, period. No admin fees, processing, underwriting, origination, nothing. Zip.
Oh. Okay?
So, and the reason why we do that is because number one of the co-founders of our company was an Army officer. Okay. So that's number one. But number two, what it does is all of that nonsense that you hear about veterans paying fees and sellers having to pay this or that is no longer valid. When I can explain to a listing agent, well, I have to pay fees with a VA loan. Well, in fact, you don't, because here's why. I don't charge any. You have to pay nothing.
Oh.
So the breakdown of your closing costs doesn't include any fees, but can you tell the people what fees are we talking about? Because they might be like, oh, y'all keep saying fees, but what are these fees?
So when you're talking about origination fees, there's an origination bucket. So you're talking about administration fees, processing fees, underwriting fees, or the lender can charge a lump sum. So let's say a flat 1%. That's what the VA tells us as a lender that we can charge maximum in that transaction. Okay. But think about it like this. All the rest of the fees on there are third-party fees. Okay. So appraisals, reports, flood certs, little things like that, your escrows, taxes, insurance, all your title fees. There's little nuance fees depending on what state you do business in. Florida has an intangible tax, Virginia has some little things of theirs. But what we as an industry like to do is hide behind that. We don't give full disclosure, right? We like to trick people with the words that we use. Okay. It irritates the crap out of me.
It's the same here. Cause let me tell you something. I look at those sheets and I call the lender, hey, what's this? What's that?
That's what I do too.
I call them. because it's not fair. It's not fair. Now, one thing I do understand, and one thing I had a lender, and this is why I appreciate lenders who do not mind taking the time to educate not only the client, because if you educate me, I know you're going to educate my client.
Yes.
Period. If you can't educate me, because I put them through, they got to go through a little testy test. So if you can't educate me, then you can't educate my client. Right.
I can't trust you with my client because I don't know whatever you're going to do.
Right. Now there are some to where I have been told, and I've seen it, on the other side. So I appreciate that. Mm-hmm. And they're like, hey, these are all the closing costs that could happen. Mm-hmm. Right. This is everything that could happen. And then once the contract is accepted, they send out, like, I guess the form to deny, mm-hmm. and they deny the things that they're like, hey, per your contract, you're not getting X, Y, and Z, and these people are paying this. So I need for you to deny them. And I think that's a really big part that people need to understand is that, one of the lenders I work with here, he broke it down for me. He was like, yes, I know there's a survey up there. Yes, I know it says termite and moisture up there. I know these things are up there. But once we get the contract and we send out the initial disclosures, that client then has the option to deny those fees. And so we were looking at the numbers, trying to figure out exactly how much. And that lender took the time to go in and subtract all the stuff and was like, hey, you have $1,500 worth of stuff up here that's not going to be up here.
Yeah.
So
we have to do it until you deny.
Good point.
Is that correct?
We might anticipate like a final inspection fee, right? On an appraisal. So we'll put that $150 on there, and we tell them, look, we're going to show you this because this is what could happen. Now, if we get your appraisal in and it's as is with nothing, we're going to remove that. We can't charge it to you if it doesn't exist. Right? So, but again, most people won't do that, or they won't put it on there. Then they put it on there
and forget to take it off.
And they're like, okay, but you didn't put it on there in the first place. Well, we didn't know it was going to be there. Well, I'd rather err. What I tell everybody is I would rather err on the side of caution and show you something that might be $500 to $800 to $1,000 higher, and then you come to closing with less money than more money. That's a way easier conversation to have.
That's Absolutely. Why you get that 72 hour, you get that loan estimate within that 72 hours. And so Victoria, you was talking about like the inspections and stuff. Our inspections are not on our loans and stuff. It's up to the buyer to get an inspection done. So those fees are not like that in Texas.
So our homeowners are like the home inspection fee for like your home inspection, that's not up there. But on our contracts, it does for our wood destroying insects or termite inspection. That is on our contracts for the and there's a checkbox that says either paid for by the seller or paid for by the buyer. There's also another box that says like who has the utilities on. Like it's down to the utility.
Oh, well, that's only when it's like a foreclosure or something. The listing agent will put it in there, so it's a little bit different. I guess everybody does things a little bit different.
And our contracts here in Virginia, they're up there no matter whether it's a foreclosure or not, and it says buyer/seller to have utilities on during inspection, and you actually have to check, seller. I always check seller because the seller you should have the utilities on. Like all the way up for the bio inspection, for the home inspection, you should have the utilities on.
Sure.
To where in our Tennessee contracts is built in.
Jason, I want you to do me a favor. In the private chat, can you put your information so she can or write it in so people can contact you? And as you're doing that, can you just let them know you can work in any state, but what states you all are actually licensed
in?
in?
So we are licensed in Oklahoma, Texas, all the southern states, all the way to Florida. Okay. North Carolina, South Carolina, Virginia, Illinois, Kansas, and Missouri, Colorado, and Arizona.
Okay.
Well, what I've tried to do is build strategic partnerships with agents at different installations by referral mostly. I only work typically by referral. That's how my business has been built.
Okay.
But as a need pops up for me to get licensed in a different state, we have that conversation. Like I'll go get licensed on that state, but I like to look at what we do here as a partnership.
Okay.
Yeah. I want to do business with people I want to do life together with, right? You and I probably talk more than I talk to my wife, right? As agent relationships. It's just the way it is. And she's downstairs, but that's okay. but that's the way I think this business should be.
Okay.
Right? We all have lots of choices out there.
Let me put
And
your
for
phone
me,
number.
yeah, I'll put it in there.
Okay. So, Victoria, let the people know where can they reach you? Again, what states you are licensed in, and if you have a team in Tennessee where they can be. Okay, her information is up there for everyone who wants her information. You can take a screenshot of her. You can go back and look at. You can look at it on YouTube and everything else. And as far as Jason, he is amazing. Anybody that's out there that's a veteran that is watching, you just give him a call, or you can send him an email, and he will definitely get back with you when he can. I got one more question. Inspections. The question that I asked you this question, which came up, and I think she's watching. If you found a property that has central air and heat on there, but it's not working, and that seller has put all window units, will that house go VA?
That's a good question.
The answer is, as long as it's adequate for the space, the answer is yes.
So you mean as long as the window units are adequate for the space?
Correct. As long as those window units will adequately heat or cool the space, the VA will be okay with that.
Even though there's a unit there that the seller said is inoperable, they're not fixing it, period.
If there were no window units, the answer to that question would be yes. The VA would require them to fix it, because if it's there, it has to work. But is that they have window units that are adequately there, they will use that. Now, you may get some pushback on some of those things, but this is, in my opinion, this is where the education and the communication between all parties comes into play. Okay. Right? So the best thing people can do for themselves, to be honest with you, if you're in our industry, is read the VA Lender's Handbook. It's all out there for public consumption, right? Anybody can read it. It's accessible to anybody, and it breaks down a lot of these things, and it doesn't do it in typical government speak. It's actually easy to understand.
Do you have a VA home buyer's guide that you have?
We're actually working on that.
Okay.
It's there's a lot, because I'm kind of OCD when it comes to things, and I like to have everything, because if I'm looking at it through the lens of a military or a veteran buyer, if I'm going to pick up this piece of paper either in digital format or in paper format, this is what I want to see. Not just, I've seen a lot of them out there, honestly, and I don't like any of them, because they're so generic that it's like, they're just marketing pieces, and I don't want that. I want it to be informational. So we're working on it. Hopefully we'll get it done one of these days.
So the VA lender's guide you talking about, you can go online and look at it. I know it's a lot, probably 1,000 pages. Or
there's 12 chapters, and only 10 of them that actually pertain to anything that we do here. Especially the chapter 12, which relates to minimum property requirements. If you're talking about situations like that, there's a lot of them. And what I'm going to encourage all the industry people who may hear this, and any LOs or any even buyers that listen to this, is that you can call the VA Regional Loan Center and ask any question you want. They are there to help you. You can talk to a loan production officer. You can talk to somebody in construction valuation, and they will answer every question you have.
Oh, speaking of construction, if a person is buying a new build and they want to get an inspection done, can they, as a veteran or I know any buyer can do that. Do you recommend that as a veteran buyer?
1,000% always get an inspection. I don't care if the house is 2 days old or 200 years old.
Okay.
Doesn't matter.
Okay.
That's just a protection for the buyer. For sure.
And I have one last question.
Yes. Come on.
So if let's say the buyer has an offer, it's been accepted, and it was $300K, right? The appraisal came back at $325.
Okay.
Can we up the purchase price to roll in closing costs after the appraisal has been received?
Yes. The VA's rule on that is this: as long as it's not detrimental to the veteran buyer.
Okay.
Right? And in that situation, that is not detrimental, because they're actually taking money out of it, keeping savings, keeping assets in their bank account, and rolling it into the mortgage, so to speak. It's a great question, because a lot of lenders will tell you that after that notice of value is issued, So once our staff appraisal reviewer looks at it, they issue the notice of value that it's 325 or whatever, that they won't let you do that. But that is not the case. The VA says as long as it's not detrimental to the veteran, you can absolutely do it.
So can you explain to somebody that's listening as a veteran or anybody that's listening, what do you mean detrimental to the buyer?
So there are instances where where we have seen you're not rolling the closing costs in. It's sometimes the seller just wants more money.
That's true.
So if the listing agent were happen to get wind of what the house appraised for, they're going to hold the deal up and say, I'm not selling it until you do this. I'm not going to, and I've seen that.
But the contract is already signed. So how do you?
Sometimes the agent will go, look, this house is really worth $325. Give him $312. It's still a good deal. You cannot do that because that is detrimental to the buyer.
Okay. That's crazy.
Okay? Because you ladies know that there are people out there who do not have people's best interest in mind.
It's just a sale.
1,000%.
It's just for them to get a sale, and that is just the. I mean, and the way the market is now is it's gonna get tougher for everybody. It doesn't matter if you're an FHA buyer or conventional or VA. Pretty soon, for any buyer to buy a house, they're gonna be at 400,000, and that's gonna cut out a whole bunch of people.
Absolutely. So one piece of advice I'll leave all the listeners with this, and this is somebody who's done this and talks to a lot of people all around the country and sees a lot of tragic cautionary tales, to be honest with you, is that if you're going to be out in this market buying a house and you're a veteran, you're an active military member, do your due diligence, number one. Ask as many questions as you need to make you feel better. Mm-hmm. And if that agent or that LO gets irritated at your questions, go find somebody else. That's number one. Mm-hmm. Number two, rely on your relationships. Okay. If there's a buyer in Hampton Roads that used Victoria before and they had a phenomenal experience and they tell you she's the best that there is, well, they're saying that from personal experience. Number one.
Yeah.
That's number one. And two, rely on those lender relationships because we're not all built the same. Mm. If you sent me an FHA buyer, as much as I've done FHA through my 20-year career, I'm probably going to tell you, you're better off going to somebody else that deals with the FHA on a daily basis, and that's not me.
So how many?
And that's okay to say.
Yeah. I take my ego out of the equation, right? I could take that deal on and possibly screw it up because I haven't. The FHA handbook looks like the phone book, right? I could miss a guideline or something.
Yeah, that is true.
And on top of that, my team, my process, my structure is built for the military, right? Okay. That's what we're built to help. And I may not be built to help that FHA buyer that's that way or the USDA buyer or something like that. I may not be, but I'm going to tell you that.
Yeah, that's good to know.
What I want for them is to get the right kind of help. It's not about me. It's about them.
Right? How many loans did you close last year for veterans?
We did 205 VA purchases last year.
Woo! What?
And the year before that, we did 242.
So wow. So far this year, has it been pretty good or has it slowed down a little?
We are about on par where we were last year. We're going to do this month in March. We did 26 purchase transactions. Oh. So, and it's just me, just so you know. There's not a team of LOs. It's just me.
Oh.
So it's building relationships. That's it. And having a process and getting along with people and making sure that everybody's taken care of. Customer service, communication, all those things rolled into one, because my goal for you ladies as agents, when you're doing business with our team, I don't want you to call me. I want you to have such good communication with my staff that you don't have to call anybody, because if you're calling me, you're taking time away from going and finding new buyers or helping somebody else.
Okay.
So
what's your people that are listening now? Let them know your Facebook page.
So you can find me on Facebook under my name, Jason Stier, STIER. You can go to Instagram under VA_loan_boss. Everything is VA Loan Boss. That's how I've branded myself throughout the years. And so on Instagram, and I'm not on TikTok much. I watch TikTok for the funny videos. That's all. I mean,
That's about it.
that's about it. But there's some great information on there. But you can find me on YouTube under the same. I've got a whole channel built out that has all kinds of educational videos,
We do.
interviews that I've done with agents and nonprofits and all that through the years. And I always direct people to that YouTube channel to watch those videos and then come back to me with questions, and we'll take it from there.
YouTube, Victoria, let them know you have a Facebook business page or Instagram page. Just let them know.
I do. So my Instagram page is Victoria Bailey Realtor. And my Facebook page is also Victoria Bailey Realtor. So you can find me up there. I always say you can call me, text me, smoke signal me, email me. I'm going to be there. I just ask for a bit of grace because I am a firm believer in giving all my clients the same attention. So if you call me or you text me and I don't get right back to you, give me just a moment and I'm going to get back to you.
I'm so glad you said that because
everyone gets their same.
People want instant access, right?
No.
They got to put the easy button and we're just going to go, and here we are.
Right.
I'm a father and I'm a husband, and those two always come first.
Yep.
Right?
I'm a wife. I'm a daughter. I'm an auntie. I have grandkids, not grandkids, but godkids. And sometimes I have to take time to eat. My husband and I,
believe it or not, we do eat, people.
We do eat. Sometimes it's from my driver's seat, but
in the car, French fries flying everywhere. We do eat.
Mm-hmm. My car's gonna smell like McDonald's, but it's okay. Okay. Never mind.
Okay, y'all, stay right there. Miss Kesha, if you want to come on, Miss Kesha wants to come up. She wants to introduce herself. We're just waiting on Miss Kesha.
Hello.
Hey, we can't see you.
I am here.
Okay.
Hello, everybody. This has been a really, really, really good show. You all educated me on some things. So I'm sitting backstage, like taking notes, like, oh, wait a minute. And it's always a fun time for me, when I run these shows. But just to introduce myself, I go by the name of Kesha Kesh. I am the CEO of the Power Team platform. I fell in love with podcasting, radio, those sorts of things. So my vision was to start this podcast, and I am so, so proud of you, Bree, only because when you first came to me, you were afraid. You were like, oh, I never did nothing like that before. And just to see you blossom and just to see you building these relationships with these great people and doing your thing, it's amazing to see. So tonight, the reason I wanted to come on was because I know that you're saying, wait a minute, it's been a year. Well, yes, it has. That year has come so fast that she's done this. And I want to present this to you. I remember asking, let me mail this to you. And I said, wait a minute. I want to make sure that I present this to you tonight in front of your guests, just to show my appreciation with you rocking with the Power Team platform. And what this says is, happy anniversary, Labrita Dudes. Thank you for your dedication to the Power Team platform. And I will be sending this over to you. And again, thank you so much for all that you're doing. Everyone that you're helping, just being a voice. When we have the platform to educate people, to help people, and extend the knowledge of what we have to use that to our advantage. And you're doing it so, so well. And I just want to say thank you.
And I just want to thank her too, because she knows me. I mean, I let people come on the show that I never met. And she'll be like, you want to, and some of them businesses have grown and some of them have just stepped out and they on Instagram, and she's my witness to this. It's not about, you come on podcasts, yes, to get clients, but for me too, it is to help other people to grow their business. And the idea of me reaching out to Mr. Jason and Miss Victoria, my show I had, she was like, look, you got a network. She said, how about you go and get somebody from, out of state? And I'm like, well, okay. And I was kind of nervous at first. And then I asked Jason, do he know anybody? He was like, no, so that's when I was like, oh, I know who I can get Victoria. And so just like now, people that are listening, because people that can go back and watch this, if you're moving to Virginia, if you're moving to Tennessee, she can service you. And Mr. Jason Steer here, the VA loan boss, I can't remember all the states that he are licensed in.
A lot of them.
It's a lot of them. You can go to his Facebook page. You can go to his YouTube page. And you can get that information. And as far as me, I'm in the Dallas-Fort Worth area. I am studying to become a broker. So hopefully in the next couple of months, the test is not working, but hopefully in the next couple of months, I will have my license as a broker. So it has been tough. So I'm not going to sugarcoat nothing. It has been tough. So I just want to help everybody. It doesn't matter. FHA, VA, first-time home buyers or anything, but Mr. Jason, he's going to be my VA guy. He knows everything, and everybody that's listening, if you have a question, just email him. You can't expect him or no other agent to pick up the phone at that time when you call. Give people 24 to 48 hours to contact you back. And if you contact somebody on a Friday, sometimes people don't get back with you, until Monday. But I really want to thank Jason, and I really want to thank Victoria. We got to hook up again. Mr. Jason, we got to hook up again.
Yes.
Hey, I'm having a class here.
When is the class again?
April 5th.
Oh, yeah, I'm coming. I'll be there April the 5th at the class.
So you come in, we'll learn some things, and I'm excited to meet you in person finally.
Yeah, so finally it's just been texting and on Facebook, but now we'll get to meet each other.
And Victoria, I'm actually heading to your neck of the woods the first part of May.
Let me know when you're here.
I will be in Virginia Beach in May for 3 days, first part of May.
Okay.
So I'll be out there for a few days. I'm having a couple of events out there, and then just visiting some folks that I do business with there. So I'll give you a heads up, and we'll get together and meet.
Yes, definitely. And thank you so much for bringing me on. I greatly appreciate it.
This ain't be the last of it, because we're gonna do some networking together. Y'all might see some ads out there if you're moving to Texas, and Jason, you will be in the ad, Victoria be in the ad. You just never know what the future might hold. But Victoria, you on a different level than me, because I only deal with people that are retired or whatever. Now the person that I sent him, they're coming here, so it's a difference. But you deal with that PCS, like he said, so that's a whole different ball game. But we still deal with the military. You just deal with it on all the ends. As with me, I deal with it on the retired end, or the people have already retired. So that's a different thing. So Ms. Kesh, I just want to thank you to giving me the opportunity to to have the faith in me, because it took me a minute. It was about 6 months to a year before I even just said, go ahead. And I don't know what happened, but I was just a little nervous to do it. So now I'm okay, because if you go back and look at the first one, I was like, ooh, but now it's like, okay. And like, she was like, my eyes was everywhere, because in this one too, it probably is. I was looking at the phone, people asking me questions, but it's a little bit different now than it was when I first came. But Ms. Kesha, thank you so much. Thank you for pushing me, because I did want to give up. Victoria, you the bomb. Jason, y'all the bomb. So
I appreciate you for doing this. For sure.
Yes, definitely.
We'll do this again, maybe on a different level.
Anytime you need me, I'm here.
Okay, and we'll try. I was gonna see, can I get it done earlier, or maybe, and the next time you come, Jason, I'm gonna have questions about just different things, because this time what you talked about is so very detailed. It was like, whoa, you need 2 hours to do this.
So if there's certain topics, whether it's topics, whether it's things like that, we can name a topic and do that.
Okay, thank y'all
again. A topic series.
Yeah, we can. We can do that. We can do that. Thank y'all again for coming. Thank you, Miss Kesha, for just thank you for everything. Victoria, I'll be calling you. I'll see you anyway in June.
Yes,
I'll see you next week, Jason.
All right.
You all, it might take a minute to go off, so just wait until you hear my song or whatever. But
it's the things that you do, and it's the smile